Hello and welcome to the FNO show on BloombergQuint Live, India's first digital live streaming business news service. I'm Darshan Mehta welcome to Hot Money. Let's welcome our guest at this point of time. We have Senthil from Newberry Capital. We have Vineeta Sharma from Narnolia Financial and independent investment advisor Vivek Mawani, who is joining us on the show. Today on Hot Money, we'll discuss stocks like what's the way ahead for the NBFC stocks. So what's exactly happening there? What should be accumulated in Dewan Housing Finance? Should that be accumulated? The management came in and gave a clarification of what exactly has happened, which is the top Nifty 50 stock that they would take a bet on at this point of time, and what's plaguing Maruti Suzuki at this point of time. The counters corrected from levels of 10,000 right up to levels of 7,700 currently. So is there merit in accumulating Maruti? So we start with the first one, and that's the NBFC pack. What's the way ahead, and should any NBFC stock be accumulated? So Vivek, I'll start with you. Your view on the NBFC space, and should any NBFC be accumulated?
Well, at this point of time, I will stay put and sit on the sidelines and not really look at bottom fishing as far as NBFCs as a sector is concerned. The concerns that suddenly have emerged in light of interest rate cycle on the rise and possible asset liability mismatches in some NBFCs is going to lead to some disturbances. The NBFCs over the last 2 years or 3 years had run up also very sharply, so valuations of most of them were also much higher than the average that they traded at any time in the past against their own comparison, or even compared to a good quality private banks like Kotak Bank or an HDFC Bank, for example, or even HDFC Limited as a matter of fact. So some of it is unraveling. Some of the concerns for the sector will hold true. I would not at this point of time go out bottom fishing, but once the dust settles, Bajaj Finance or a Mahindra Finance, the good quality names would probably be on my shopping list at some point of time.
Okay, but how much lower do you expect these stocks to come before they come on your radar, Vivek?
Well, it would be difficult to put a absolute number on this, but market, as we know, tends to overshoot both on the optimistic side or as well as pessimistic side. Today, everybody is raising too many concerns on NBFCs, which until just 2-3 months ago, everybody was just euphoric about the sector. So, I mean, on how much we overshoot on the downside, but if, as far as Bajaj Finance is concerned, if I could get it at about 3.5-4 times price to book on a forward basis, Bajaj Finance could probably be on my radar, or even a Shriram Transport Finance could probably come to one-time book value given the kind of sharp erosions that we have seen on Friday, and that erosion continues today as well.
Okay, Vineeta, you must have had a lot of clients' queries coming in, over the weekend because of the carnage that we saw on the NBFC space. What have you been advising them? What should they do on this NBFC space? Is there probably more pain that is there, or are you recommending them to start accumulating?
So there are two ways to look at it at this juncture when NBFCs have corrected. So NBFC as a sector, it's not homogeneous. It's very heterogeneous. So looking at the asset profile, there are some which are totally on the SME side. Some of them are on the consumer finance. Some are the lending to corporate. And two types of NBFCs normally face problem is one which is more on the corporate lending side, and the second is housing finance. We have seen in the past, not only I mean even US also. So normally it happens when the asset liability mismatch for more than 6 months to 1 year asset liability, there is a lot of mismatch. And especially those companies which are giving loan for a say 20-year period, and they are financed by say 3-year 3-year liability, 3-year NCDs. So there you see the major problem, which is what happened with Dewan Housing. So as of now, there are two ways. One, you can buy something on the valuation side which is very low, and you are seeing a business where business is turning on the positive side. There we can have RECL people who want to take a little bit of a risky profile where valuations is valuation is the cushion. And second is of course the Bajaj Finance, because earning growth and overall AUM growth is being seen at 21% year on year. The kind of grip it has had on the, it has 24 million clients as of now. And the technology front. So I think Bajaj Finance on the good earning growth, where you're getting some 20%, 10%, 15% correction from 20% correction.
It's almost 30% from 3,000. It's almost 2,200 plus.
So you're getting that. I mean, it's difficult to get a correction in good quality stocks. So one can accumulate Bajaj Finance, looking at the story, and also on the RECL, where valuations are done.
What makes you bullish on Bajaj Finance? Just to get a perspective, because probably valuations are still on the higher side compared to the peers. Do you believe that growth will continue year on year on a base which is growing for them? What's the trigger for Bajaj Finance if someone wants to buy? Even if it comes lower, that's your rationale, but what's the trigger?
See, the trigger is, if you look at Bajaj Finance, the way it has captured the market. It has captured the youth market, and the youth market, somebody who wants to finance a mobile, or somebody, you know, on the early stage of settling. So you're financing your fridge or a TV. So it has the database of those people from the very youth. So the kind of market it is, you know, taking up from the whole Indian sector, I would say. And secondly, the technology. The turnaround time is very less. It is there. I mean, the kind of breadth Bajaj Finance has brought on the table, and also on the technology side. These two things makes me bullish about Bajaj Finance. Okay,
Bajaj Finance, REC, Mahindra Finance and Bajaj Finance are the four stocks. Bajaj Finance is common, but that's what's been spoken about by two of our guests. What about you, Senthil? How are you viewing when your clients speak to you about NBFC? What are you advising them? And do you feel this is the bottom, or there's more pain?
I think there is more pain to come.
Okay.
Because the interest rate cycle on the uptrend has been more or less factored by the market. But now the new issue of liquidity crisis comes into thing. So the confluence of events has made the entire NBFCs a bit jittery on the valuation fronts. Because if you look at till last quarter, most of the NBFCs, the valuations have been factoring in most of the positives.
Okay.
So all those NBFCs posting growth of 25 to 30%, the valuation stands at more than 3 times price to book. So now with both the interest rate and the liquidity position getting bit tightened, I think the valuations are started to correct.
Okay.
So I think this is the time we have to look at the NBFCs who have the ability to pass on the rate hikes. So those who are present in the niche segment, like Vivek mentioned, the Mahindra Financials, I think being a presence in the rural segment and the ability to pass on the rate hike is quite high for them.
Okay.
And we also like Capital First, because once they merge with IDFC Bank, I think they'll be getting a banking platform.
Okay.
So they will be able to garner a liability franchise for them. So I think Mahindra Financials and Capital First could be a watch for the if after the correction maybe.
Okay. If let's say in the credit policy that comes in very soon, probably next week, if there's a rate hike, would there be more pain on NBFCs?
I think so, mainly because the valuations are still on the upper end.
Okay.
Like if you look at the top consumer lending companies like Bajaj Finance, still they trade at more than 6.5 times price to book. So I think with these corrections in the last 2 days, I think the market is moving towards a little bit of rationalizing. So still the NBFCs are not a steal at this price.
Okay, so that's the view. You want to say something? Yeah.
See, I mean, lot has. I'm sorry to have interrupted.
Yeah, that's fine.
While all of us talk about, and even the managements of certain companies have commented on the interest rate and asset liability mismatch. I mean, all of us are so focused on equities. I also occasionally look at what bonds get traded in the secondary market. So obviously on Friday, what triggered was that sale of a block of bonds by DSP mutual fund. Now, if we were to look at what the secondary market was doing as far as the bonds of NBFCs were concerned and the bonds of some of the top rated PSUs were concerned, and when I say top rated PSUs, an SBI bond has been trading for a while in the vicinity of 8.7, 8.8, even NHAI or IRFC, which are like very decent PSUs, and compare them to what the bonds of some of these NBFCs were trading at. The interest rates are equivalent. Some of the NBFCs traded at interest rates lower than even PSUs. So now either the market or the bond markets were just too pessimistic about the PSUs, or just too optimistic about the NBFCs. And Friday, what was the trigger was that a little reset in terms of the yields, the interest yields on the NBFCs. And once that cycle kicks in, incremental borrowing, whether by bonds or CDs or debentures or whatever way these NBFCs would have access to money, whether it's banks, insurance companies, HNIs, which is typically, or even even mutual funds who typically finance the NBFCs, all of them are probably going to be demanding higher interest rates and a certain premium to PSUs. That probably is going to play out over a cycle. Compound that with rising interest rate scenario from RBI's policy, that really becomes a serious concern over the long term on return on equity as well as interest margins for NBFCs.
Okay, so that's the view that's coming in on NBFCs. There are certain names that were discussed today that you should accumulate, but I think the consensus view is that there could be more potential downside. So you don't put all your money at one go if you're planning to buy any of the NBFC. It should be a staggered investment in some of the quality names that we discussed: Bajaj Finance, Mahindra Finance. There was Capital First, REC as a risky bet is something that Vineeta spoke about. But on a basic note, these are the NBFCs that's spoken about. We will stick to NBFCs. The Dewan Housing Finance, let's pull that up. It was down 60% on Friday, managed to recover from the lows of the day, was up almost 20% in the morning, has come down to just 8%. When the entire NBFC pack, like Indiabulls Housing Finance is down 10%, Bajaj Finance is down 8%. So will you buy into Dewan Housing Finance? The clarifications were given. Are you buying into these clarifications, or would you avoid Dewan Housing Finance? Senthil, the clarifications, so it's out in the public what exactly the scheme of event happened. The management has clarified on 2-3 analyst call. They spoke to channels, they gave a statement, they gave their presentation. Are you convinced of the financial stability of Dewan Housing Finance? What should one do?
So first, to draw the points from the management side, so their position on the liquidity side is quite stable because they have investments of around 10,000 crores plus undrawn bank lines of around 9,000 crores. So around 19,000 crores of liquidity position they have. And on the ALM side also, I think on the 0 to 1 years till 3 years, I think the ALM mismatch is also on the positive side. So considering the liquidity and ALM side is quite on the positive side, I think the steep drop that we saw on Friday was majorly with respect to what has happened in the indirect effect of the debt markets impact. So currently, if you look at the Q1, I think their portfolio mix got tilted a bit on the non-home loans because of a higher growth in their LAP book. So in Q1, like LAP book grew by 70% kind of thing because on a low base of last year. So if you look at the mix, currently the home loans is at around 15% of the portfolio. So remaining part is in the project loans and other LAP kind of loans. So we have to watch out for how they increase their home loans book, because currently the valuations looks at around 1.2 times price to book 1 year forward book for a growth the company has posted in the last 3-4 years, and even in Q1 the PAT growth was around 35%. So I think the competitive scenario in housing finance is quite intensive. So the valuation multiples should be in the range of 1 to 1.5 times. So now the counter is trading at 1.2 times. So I think it looks interesting at this multiple, so one has to keep a watch list on this.
But would you be positive or negative?
So I'm positive on this.
Okay, on the positive side, Vineeta, Dewan Housing, you all have it under active coverage?
Yeah, we do have active coverage.
And post the fall, what have you advised?
Post the fall, see, already the stock has corrected a lot, and at this juncture, we are not asking people to have an aggressive buy. Rather, we have a neutral sort of a stance right now. Though considering the price target that we had earlier, it is an accumulate because still the valuation gives you that sort of a comfort. So around 1.5 times is what we are looking at, which will be around 600 plus for the for the DHFL. And obviously the growth that had come on has been reporting for the last quarter also 35% AUM growth and the PAT growth also. So these are things which are positive in Dewan Housing. The overall housing finance segment, as we had already earlier also discussed, so housing finance doesn't look very impressive counter as such because of lot of competition. as well as the asset liability mismanagement, that mismatch that we were talking about. And if somebody wants to buy something, so Diwan Housing is right now at a cheaper valuation.
Okay, so two of our guests do believe that valuations now support Diwan Housing Finance. Vivek, would you buy Diwan Housing at this point of time? Were you convinced with the arguments?
Well, not really. I have not been convinced about the clarifications the management has given on Friday over the weekend, and I believe something was announced today morning as well. In between, they also put out a note of credit rating agencies also reiterating or emphasizing on their credit rating being top class, AAA, AA, whatever Diwan Housing has. See, my sense on Diwan Housing is there never really is smoke without fire. That's number one. Number two, last 10 years, DHFL has suffered from a certain credibility issue as far as the markets are concerned. Equity markets or equity market participants weren't really convinced about the quality of the book or the quality of the growth of DHFL, that notwithstanding a AAA rating on their debt, as well as quarter after quarter, year after year of delivery. So if we look at the valuation multiples Diwan Housing had been getting over the last 10 years, it was always a serious discount to most other NBFCs and even housing finance companies. So if we looked at other housing finance, and so that's not going to go away. So even when the entire NBFC and housing finance space was in a euphoric period, whole of 2017 and probably 6 months of 2018 as well, Diwan Housing had lower multiples. And now when there is actually an issue, not just in Diwan Housing but for the whole NBFCs as far as refinance costs are concerned, in terms of sector going into derating and a whole lot of other issues about accounting issues also, I mean, there's no sense in really sticking the neck out. And I mean, if one really has to buy, as I mentioned earlier, probably in this kind of a panic, it makes sense to accumulate on better quality where there are no balance sheet issues, where there are no governance related issues, where you really don't have an issue. So then why not look at HDFC, which also has is in the process of correcting, or a Bajaj Finance? Premium valuations, but yes, I mean premium valuations to Diwan Housing, but at least you're not grappling with management related concerns from that point of view. Okay. Just one more point I would like to add, and although I don't really, I have a limited understanding of technicals, but I'll still add that generally whenever these kind of sudden panic declines happen of 40-50%, I mean whether you call it a fat finger or whatever, the swing lows, there would be a bounce from a swing low, but eventually over a few weeks or few months, the stock price goes to even lower than the swing low. In case of Diwan Housing, the swing low on Friday was probably about 220 or 230. So, and today there has been a bounce. There was a bounce on Friday. Today also there's been a bounce, but I think eventually it'll be lower than that.
Okay, so that's the view that's coming in on Diwan Housing Finance. We got contradictory views. Two of our guests do believe that, at this point of time, valuation is something that offers, support to Diwan Housing Finance. Vivek is saying that this counter should be avoided. Among some of the counters that we want to speak about is a Nifty 50 stock which should be accumulated, because the Nifty itself has corrected. A lot of stocks, except for the IT stocks like Infosys, TCS and Tech Mahindra, which are trading at record highs, a lot of other counters have started correcting. So we're asking our guest, any Nifty 50 stock that should be accumulated, not exactly at one go, but in a staggered manner, fundamentally, which is sound and strong. So Vineeta, any Nifty 50 stock that should be accumulated, not exactly, right? It can be in a staggered manner, but what do you like on the Nifty 50?
So HUL and HDFC Bank are the two companies which have been our favorites in the Nifty. And also, but considering their correction compared to other Nifty stocks, so there is another quality stock which is Titan, which the business is very admirable. And overall, if you see the business franchise, and the brand franchise, it is very interesting company, and management is also very focused on long-term growth of the company. They are increasing the number of stores, and from 250, so say around 400, the complexion of the overall sales. So wedding jewelry, they're expecting to increase. Right now it is 30% of the total sales. They're expecting it to take it to 50% of the total sales by FY23. Also the diamond studded, which is a high margin product. So diamond studded jewelry is expected to reach another 50% of the total sales. So overall, we are bullish on the retailing segment, also the retail side, and Titan augurs well with what our theory for long-term investment.
What's the target that you all have on
So target right now, post this correction, we are expecting the target should be 1 year target should be around 1030.
Okay, so potential upside that is there, over 1000 rupee target is there. Vivek, any Nifty 50 stock that you like at this point of time?
Well, at this point of time where the market is clearly in a corrective mode, I would firstly I would not be too gung-ho about sticking my neck out and buying on declines. I think there will be enough time to do that. But since we are still discussing stocks, I'll have on my shopping list HDFC Bank and Kotak Bank, two high quality banks on my shopping list. They firstly, in terms of issues that we are talking about, whether for the other banks, whether private banks or PSU banks, most banks seem to be having balance sheet related problems. NBFCs, of course, last few days we have discussed enough on that. HDFC Bank and Kotak Bank obviously don't have all of that. So you don't have management related concerns, governance related issues, balance sheet relations. So while everybody in the banking and financial services is going to be grappling or fighting, doing firefighting on some aspect of the business or the other, these two banks probably have a seriously meaningful opportunity in terms of increasing their market share both on the deposit side as well as on the lending side, further diversify and get into those segments where their competitors seem to be getting into trouble. So we have no growth issues. Probably the growth outlook actually gets better. So in HDFC Bank, I mean 18-20% growth over the next 3-4 years seems a safe assumption. Okay. In case of Kotak Bank, little more than 20%, maybe 22 to 24% range is what I would look at in case of Kotak Bank. Kotak Bank, I mean trading at about 3.6 to 3.7 times 1 year forward price to book, and in case of HDFC Bank on a 1 year forward it would be about 4.2, 4.3. The multiples really did not expand for HDFC Bank through the bull run in the banking and financial services space in the last 5 years. So in case of multiples contracting, I really don't have a concern on that, which is a concern for some of the other private banks and NBFCs for certain.
Okay. So Kotak and HDFC Bank are the counters that Vivek spoke about. Titan is something that Vineeta spoke about. Senthil, what should be accumulated as per you?
So again, Titan.
Okay, Titan.
Most majorly because if you look at the jewelry market in India, it's around 50 billion USD dollars. And if you look at the topmost player, Titan, its market share is in single digits. But if you look at the other consumer focused companies, they are the market leaders in their core categories, and the market share will be around 40-50%.
Okay.
So I think still Titan has a long runway ahead, and over the long term I think the structural shift from the unorganized to organized will happen going forward. So the growth potential for a company is around 25%, which the management has highlighted, and they kept the target as for the jewelry segment. And I think the recent correction, still the stock is trading at around 40 times 1 year forward earnings. So I think one has to keep this stock in the watch list, and any decline should be accumulation.
Okay. So Titan, HDFC Bank and Kotak Bank have been spoken about. As we speak, the Nifty is at the lowest point of the day. The Nifty is below 11,000 mark. The Sensex is below the 36,500 mark in trade. So there is real carnage that's going on in the market at this point of time, trading at the lowest point of the day. We'll move on to the last and final stock, and that is Maruti. Maruti has been down from levels of almost 10,000 to right now. It will be close to 7,500 if I'm not wrong. But there is it's 7,600. So we're asking our guest what's plaguing Maruti. Is it a good time to accumulate? So we'll have to go very fast on this. Senthil, your view on Maruti?
I think majorly the correction has got to do with the valuations, because in the last 4 years, if you see, Maruti's earnings have tripled and also their PE rating got double. So these two factors played a huge role in the major returns for the stock. But currently I think the valuations have come to the rational range. It's currently trading around 26 times on your forward earnings. And also once the BS6 norms kicks in April 2020, it's going to be a major beneficial for Maruti, because the diesel segment is going to be the most affected part in the passenger vehicles. There will be a price hike of around 1 lakh rupees. So this will bring down the more market share shift towards the petrol. So I think Maruti is clearly the leader in the gasoline segment. So currently their SUV market share is around 28%. So further increase in market share may happen once the BS6 norms kicks in.
Okay, so overall, are you positive on Titan? Maruti?
Yes.
Okay, but what about you? What's your view on Maruti?
See, Maruti, right now we assume that rising commodity prices has been a bearing on Maruti. And in fact, in the entire auto space, we are seeing some margin compression, as we have discussed earlier also. So one is and also the royalty payments, which because of rupee depreciation could count on the margins. Overall, but we are positive on Maruti considering the type of premiumization it has done through Nexa. And also the kind of market share and there are surely capacity constraints, but that management has addressed too. By by January 19, the second phase of Gujarat will come, and by January 20, the third phase will start contributing to the volume numbers. So also on the royalty side, so they are addressing all the concerns. So on the royalty side, they have come out with a new, there has been new agreement between the companies, and royalty will be capped to 5%. Also, it will be more on the number of units sold. So it will be that is to reduce the dependency on yen. And third, also on the commodity prices constraints. So they are doing some. They are shifting dependency on the Gujarat so that the overall logistics and costs come down. Okay. So that's the reason we like Maruti, and we have a price target of 9,930.
Okay, 9,930 on Maruti. And Vivek, what's gone wrong for Maruti? Would you venture a buy at 7,700, almost 7,700 on Maruti?
Yeah, certainly. I mean, for me, it's a buy on declines. But given the mayhem and given the panic, I would now wait for it to fall to less than 7,000, maybe 6,000 to 7,000 range is when I would now initiate buying. Although I've been positive on it even a month ago at 8,000 plus levels, and I continue to be positive. What has gone wrong? Three things. The August volume number was not really to delight of the market participants, with a marginal dip in volumes, although for year till date they continue to maintain the double-digit volume, and they continue to maintain that guidance of perhaps about 12% volume growth. So that's number one. And long term also 10 to 12% volume growth doesn't seem to be an assumption that is too optimistic. I think that's a realistic assumption. Earnings growth of 15 to 18% on back of better product mix, premiumization, slight price increases, and internal efficiencies also with the Gujarat plant and contributing greater volumes. So over the next 3-4 years, earnings doubling in 4 years seems like a safe assumption to make, with about 18-19% earnings growth. In terms of valuations, current year expectations seem to be about 300 rupees of EPS, next year about 350, 55 or maybe 360 rupees, and subsequently 410, 420. So that's about for the next current year and next 2 years. Valuation wise, at about 20 times 1 year forward seems quite reasonable at current prices. Maybe if it falls, I mean, it gets even better. So it certainly would be on my shopping list to be accumulated on declines along with the other stocks that we have discussed.
Okay, so that's the view that's coming in on Maruti. I think it's a consensus accumulate view that's coming in on Maruti after the fall, but probably at even lower levels there should be more accumulation that should be done. But with that, it's a wrap on today's Hot Money. Vivek, Vineeta and Senthil, thank you so much for joining me on the show today. Ask BQ comes up next. Stay tuned to BloombergQuint.